Joe, good to see you. How you doing? Evening. How you been? Pablo, good to see you. How you doing? Mike, good to see you, brother. How you doing? Happy New Year, by the way, to everyone watching right now. I know it's a bit late regarding Happy New Year's, but Happy New Year's to everyone. T, good to see you as well. Hello, brother Miles. Happy New Year. Think it's going to be a good one. Let's go. I do agree. Yes, 100%. My opinion is going to be a good year as well. Good evening, Miles. CMF free forever. Good to see you as well. How you doing? Can everybody hear me perfectly? Just want to confirm before we go ahead. Also, I am at my business partner's house right now, not at home. Okay. By the time everyone tunes in for the first part of the live, let's go through the intro, disclaimer, and what we're going to be talking about on tonight's live. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Mouse. You can tune to this live Monday, Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI politics, and regulations. Pretty much vital information for you to know about regarding the world completely transforming into a digital space. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. Now, on tonight's episode, we're going to be talking about what's happening in terms of the House senators and the Congress in terms of crypto regulations. We're going to go through some prospective news regarding Goldman Sachs, JP Morgan, a few other banks giving their essential opinions on the markets going ahead. We're going to talk about some war scenarios as well that has actually boosted the crypto market space. What happened in Venezuela has actually boosted the crypto market space regarding the crypto that's going to be seized by the United States in terms of Venezuela. Also regarding the oil seizures as well, that's also boosted the crypto market space. I'm going to give you a speculative answer on that one because something I'm going to be sharing a little bit later on tonight's live. Now, before we go through the first news, which is regarding the Republicans right now who are boosting essentially to push the crypto space beyond what it's right now at, and that's the first news we're going to cover on tonight's live. Before we go through that, let's go inside the comment section first, and then we go straight into the first news. By the way, thank you so much to everybody who has already liked and essentially retweeted this live show if you're watching us on X, CMF members. And thanks so much to everyone who also put a comment outside the live as well. And also thanks so much to everyone who's essentially watching on YouTube who's also liked the live as well. If you haven't, CMF members, like and retweet the live show. Thank you so much to everyone who has done it. Good morning, mate. Good to see you, Dale. How you doing? Hi, Miles and CMF. Stormy, good to see you. How you doing? Freedom Forever, good to see you. How you doing? Yes, all sounds good. Hi, Miles. Welcome back. Happy 2026. Let's go artistic. Good to see you all. Happy to be back. Missed you all. Missed the live show. Crystal clear. Let's go. Let's go, Mike. Let's go Freedom Forever. Hi, everyone. Good to see you all. One love. How you doing? What's Miles? What's up, CMF? I'm tuning in from mid-air on my flight to Hawaii. Let's go, Kerry. Happy New Year, Miles and CMF. Bullocks, I'll be good to see you. How you doing? Good evening, Miles and CMF. Happy New Year's, everyone. Good to see you, someone. How you doing? Happy New Year's. Hello, family. Let's go, Scots. Miles, I do not get notification when you go live. I don't know why that happens. Sometimes people get notifications, sometimes people don't. Now, the first news on tonight's live is, as I said, regarding Republicans. So here it is. A few Republicans essentially have crypto's destiny in their hands at the SEC and CFTC. After essentially the holiday leadership shifts, essentially the two U.S. markets regulators, the SEC and CFTC, are now run only by essentially pro-crypto Republicans, and essentially Congress is still debating on the matter of essentially Clarity Act. President Donald Trump's campaign to cut Democrats out of U.S. regulatory work has set up an unusual situation at the two agencies that will have the most say over how the federal government essentially handles crypto. A handful of Republican crypto advocates are entirely in charge of both, which is a good thing to my perspective. Regarding Republicans being in charge of crypto regulations is a positive, a major positive, because Democrats did a horrible job at essentially regulating the crypto space under Joe Biden. So let's give the Republicans a shot right now. Now, also, President Donald Trump's campaign was regarding cutting Democrats out of essentially US regulations when it comes to cryptocurrencies. The US Securities Exchange Commission just said farewell to its only Democrat commissioner, Caroline Crenshaw, last week, removing routine essential oppositions to its current essential policy drives. Crenshaw had essentially often cautioned the agency about a shift towards a digital asset embrace, including opposition against Bitcoin ETFs as a danger to investors. She also essentially took a consumer protection stance that regularly extended those essentially who invest in cryptocurrencies. And essentially, this is what was said. I think it's safe to say they're speculating, reacting to hysteria from essentially promoters, feeding a desire to gamble, wash trading to push up prices, or as Noble essentially Laturet has positioned betting on the popularity of politicians who support or stand to benefit personally from the success of crypto, said essentially Crenshaw, and had essentially said in a speech last month whether or not such vocal oppositions inside the agency has an effect on the regulatory direction of the SEC. It's over now, and the regulatory essentially is run by Trump nominee Chairman Paul Atkins and two commissioners who have essentially advanced crypto interest, Hester Pierce and essentially Mark. At essentially the sister agency, the CFTC, the new year begins with a new leader as Trump nominee, essentially Mike Sling, won the confirmation late essentially last month to be sworn in as the chairman on essentially December 22nd, which already happened. Acting chairman, essentially Caroline Pam, took the opportunity to exit the industry and now essentially working for MoonPay, which is a great company in my opinion, and also a Ripple kind of partner as well. While essentially that may be a good situation for crypto-friendly policies, Mike Sling essentially advances into his essentially not yet outlined agenda without needing input or debate from fellow essential commissioners. The absence of a baptism slate for the essential commissioners at the CFTC and the SEC has become a sticking point to crypto regulations in the US Senate. This year is all about crypto regulations. It's all about moving and shifting away from retail money to institutional money. Hence why we need regulations, because institutions won't enter into any sort of gray areas. One of the remaining points of the debate over the bill that could establish a US crypto regulatory regime is essentially the Democratic demand that their essentially parties' vaccine essentially will be filled at the two agencies. It's unclear how much Republicans are prepared to give on that. For his part, essentially, Trump has been less than essentially complying with the Democrats in any sort of way because they did a horrendous job. And I think everybody inside the crypto space can 100% or essentially back the idea that the Democrats did do a horrendous job regarding essentially bringing crypto regulations in, and the Republicans are so much better at it. When asked recently whether essentially he'd be willing to make Democratic nominations regarding Donald Trump, he answered with a question: do you think they would be appointing Republicans if they were up to them? The answer would be no. The historic essentially answer is that presidents of both parties have routinely made nominations from both, often in package deals negotiated in Congress that result in multiple confirmations at once. But this time around, Trump is only trusting Republicans to essentially push the crypto space and make the United States the capital of cryptocurrencies, which I agree with 100%. Because if you put any Democrats in positions of power regarding crypto regulations, they will just ruin it like they did essentially previously under Joe Biden's essentially, presidency. There are certain areas where we do look at and certain areas that we do essentially share power. I'm open to that, Trump said. So it's not just he's completely against essentially Democrats. He's just saying Democrats have to stay away from the crypto market space. Other than that, Democrats can have inputs in other essentially regulations. Both agencies' chiefs have been careful not to theoretically essentially run an awful lot essentially of Trump's preferences, not to allow new Democrats into regulatory roles, with new essentially CFTC and Sling saying that his confirmation testimony that he'd welcome baptism essentially input at the agency, but that's essentially out of his hands. Atkins also noted from the SEC at Crenshaw's departure that she had listened carefully, engaged essentially substantially, and approached every day with the purpose of safeguarding investors and strengthening our essentially markets. For now, both the SEC and CFTC have been racing forward on crypto policies. In the final weeks of Pam's interim essentially chairmanship, she pushed several policies set in motion: the trading of leveraged also spot crypto essentially CFTC, registered platform Bittermore, and established a panel panel essentially of CEO advisors, which is great again regarding crypto, essentially CEOs having some sort of input regarding the SEC and CFTC, because they're the ones that have the knowledge, and the SEC and CFTC are accepting to essentially, listen to their knowledge and shape the policies around it. Now, Atkins has also called digital assets the top policy priority at his agency, which is what we love to hear inside the crypto space, regarding the SEC saying the crypto space is top priority, because we want those regulations this year. Last year was, we had a few regulations. We had some votes happening as well. We had essentially the Genius Act being passed for stablecoins, which was brilliant. But we want more inside the crypto space, to be fairly honest, which has abandoned crypto enforcement actions and issued a series of policy statements to clarify its pro-industry digital asset stance in such a diverse areas as mining, meme coins, staking, and custody, and so much more inside the crypto space. Both Republican-led agencies have made it clear that they intend to pursue crypto rules with or without input from law that Congress essentially is working on. If Congress does manage to pass essentially the crypto market structure bill, and the new law essentially directs the agency towards a list of new rules and duties, writing those essentially permanent regulations would currently be in the hands of only Republican commissioners, which again is brilliant in my perspective. Regarding Trump completely taking essentially power away from Democrats when it comes to crypto regulations is a major positive if you're inside the crypto space. Anything else Democrats want to give an input in regarding other essential regulations, fair enough. Just stay away from the crypto market space is exactly what Trump has done. So I agree with that message 100%. It's a positive outlook going into 2026 now. We're in Q1 right now. So all of this is brilliant. Now, moving on from that to CNBC and regarding Venezuela. If I had to take a guess, everybody's by now seen the news regarding Venezuela completely being taken over by the US and Donald Trump, and also regarding the seizures that are happening in terms of maybe their crypto wallets are going to be seized, their oil has already been seized, the country in general has been seized, as you can pretty much say. That is what we're going to talk about next regarding crypto, essentially, and Venezuela. But before we talk about that, let's go inside the comment section first. Let's see what's happening there, and then we go straight into the next news. So if you have a question, as I say, always put it down in the comment section. More than happy to help you out. So let's see where we're at inside the comment section. Good evening, Miles and CMF. Happy New Year's to everyone. Let's go, Solomon. Hello, family. Let's go, Scott. Good evening, Miles and CMF. Manny, good to see you. How you doing? Good evening, Miles. How you doing? I'm doing great. Callie, good to see you as well. Let's go, XRP. Let's go, Scott. Yeah, I stopped getting notifications when you go live as well about 3 weeks ago. Okay, thank you for letting me know about that, T. Share the live. Let's go, Scott. Hello, Miles and family. Good evening, Miles and all CMF. Let's go. JP, good to see you, brother. How you doing? Bull run confirmed, Miles. By the looks of it, yes. Guess who's back? Well, let's go. Morning, Miles and CMF. Shelly, good to see you. How you doing? Morning. Share the live. Let's go, Scott. XRP, XLM, XDC, HBAR, hot. Let's go, Scott. XRP is up a little today. I do agree. Yeah. How are you? I'm doing great, Michael. Good to see you as well. I pray for patience. A double-digit XRP in the near future. What impact has the reverse carry had on the crypto market space? It's had positive impacts, I would have to say. Will this Venezuela, aka oil situation, impact the crypto markets? It already is impacting the crypto markets regarding this Venezuelan situation, if I'm being fairly honest. It's impacted in a positive way, you would have to say. Let's go, CMF. Are we about to essentially meet on the beach soon if XRP does what it will do eventually? Good evening, Miles. Happy New Year to you and in essentially CMF. Adi, good to see you as well. How you doing? Happy New Year to you as well, my friend. Let's go, Scott. Now, Venezuela and crypto. Let's talk about it. So, CNBC essentially has reported, reports suggest that the US government may seize Venezuela's Bitcoin reserves and any other crypto reserves they may have. A move linked to essentially Nicolas Maduro's custodial status in the United States. The potential seizure essentially could impact Bitcoin's market, reducing essentially a circuit in supply, though no official confirmation has been made yet by prominent government or financial essentially entities regarding the seizure of crypto wallets belonging to Venezuela. But there are rumors going around that that is also being seized. The potential seizure could impact Bitcoin's market, reducing essential circuit supply, and CNBC essentially report alleging that the US government's interest in seizing Venezuela's Bitcoin reserves has stirred essentially inside the financial circles. Evidence remains speculative, with a focus on so-called shadow reserves of 600,000 Bitcoins reportedly tied to the political developments essentially involving Maduro. Key figures include President essentially Maduro and Alex Saab, who allegedly essentially managed cryptocurrency operations for sanction evasions, while the Venezuelan government officially essentially reports holding 240 essentially Bitcoin. Some claims suggest essentially larger hidden reserves intertwined with oil essentially revenue. And what they mean by that regarding Venezuelan cryptocurrencies is exactly what essentially regarding Russia, China, Iran, North Korea, and Venezuela have been doing for the longest time. Due to Russia being sanctioned, due to essentially North Korea being sanctioned the day it was born, due to China having some sort of sanctions, and Iran being fully sanctioned, and Venezuela being fully sanctioned, these countries use cryptocurrencies to launder money and to be able to sell oil. All of that is now essentially being halted. Russia is not happy about the situation. Neither is China, because they made huge investments in Venezuela, and so did Iran. Iran made huge investments into Venezuela as well, and Trump has taken all of that away from every single one of them. So seizures of cryptocurrencies is going to be next. Now, another reason why the crypto market space is boosting all of a sudden regarding the whole Venezuelan situation is because a lot of money right now is being laundered through cryptocurrencies as well. Still, mainly essentially to do with Iran and Russia right now. Iran and Russia are selling weapons and oil together, selling them through essentially cryptocurrencies. To be fairly honest, due to them heavy sanctions that are put on both of them, they were selling it to Venezuela through essentially USDT or Bitcoin or Shiba Inu and a few other cryptocurrencies. But now it's a machine selling situation going on where Iran, essentially what's happening over there, immense amount of crypto transactions are happening right now with the Iranian government, the Russian government, and also essentially North Korea, and people that are still in Venezuela who are hiding right now due to the US government. Speculative financial calculations essentially discuss if these reserved essentially Bitcoins potentially worth $60 to $67 billion are real, the market essentially impact from such a supply change could drive investor essentially interest given Bitcoin's limited total essentially supply. While the speculative reports essentially lacks confirmation from primary sources, it raises questions about Venezuela's economic strategies. Discussions among investors center around geopolitical context as tensions heighten aimed economic sanctions. Historically, large seizures or sales like Germany's sale of 50,000 Bitcoins causes market adjustments. If proven, US actions could lock significant Bitcoin supply, reducing essentially influencing price movements. However, official essentially confirmations remain as absent at the time of this article. If the US essentially indeed moves to seize Venezuela's Bitcoin, it could send ripples through the cryptocurrency markets, especially through the rumored size of their holdings, says Jane Smith, financial journalist at CoinDesk. Now, that was a report essentially that came out by CNBC, but then essentially CoinDesk jumped on the report and added their perspective to the article as well. So if you're wondering to yourself, Venezuela essentially president getting completely arrested and taken to the US after the comments he made by Donald Trump, which backfired on him very badly. Donald Trump was able to arrest him within 5 minutes. It was the fastest arrest anyone essentially has been done ever in any country, to be fairly honest, and it was quite comical regarding how he was arrested. But regarding what's happening in Venezuela, the boost that's happening inside the crypto market space, there's many positives to it. One is being that oil essentially dropping in price. It shows that investors have more money to invest, is what's also being said. Two, there's a lot of money laundering happening right now inside the cryptocurrency space, which also is going to push the US to regulate the market space even faster, to be fairly honest, so that sanctioned countries stop using cryptocurrencies. And that also, regarding markets getting regulated, is a positive in the long run. Money laundering inside of cryptocurrencies is a short-term, essentially, price jumps. Regulated market space inside of cryptocurrencies is a long-term drive. Now, Goldman Sachs is what we're going to talk about next on tonight's live. Now, I'm going to be sharing with you Goldman Sachs's perspective that just came out today of what's going to be happening this year. So, Goldman Sachs sees regulations driving next wave of institutional crypto adoption. Before actually we go through that, just want to share with you that a little bit later on tonight's live, we're going to go back to Venezuela because there's something interesting happening over there relatable to one particular cryptocurrency, which hasn't been confirmed, but it is a bit of a speculative news. But now going back to Goldman Sachs. So Goldman Sachs essentially sees regulations driving the next wave of institutional crypto adoption. Last year, a lot of crypto exchanges essentially started preparing for the next wave of clientele. Crypto.com, Binance, Coinbase, Kraken, the list goes on. All of these major crypto exchanges decided to create some sort of departments within their own essentially apps just for high-tail essentially clientele that's going to be entering for next year. And now we're in next year, 2026. Next, essentially this year, as I said, it's all about regulations. It's all about the next clientele. We're moving away from retail money, which is quite volatile because it's an unregulated market space, to institutional money, which is going to become a regulated market space due to we can't have any more gray areas. So regulatory clarity and expanding use cases beyond trading are setting the stage for a deeper institutional participation in digital assets, the bank said. Wall Street giant Goldman Sachs said improving regulations and the emergence of crypto use cases, essentially beyond trading, are underpinning a constructive outlook for the industry, particularly for essentially infrastructure companies that support the ecosystem without being as essentially exposed to the market cycles. Regulatory uncertainty remains the main barrier for institutions. As I said, institutions don't like to enter the gray areas. Hence why this is the year of regulations and institutional money. At the backdrop is a shifting rapidly, essentially, the bank said in a report that came out today. We see the improving regulatory backdrop as a key driver to continued institutional crypto adoption, especially for the buy side and sell side financial firms. As well, essentially, new use cases for crypto developing beyond trading, analysts essentially led by James Yore wrote. According to James, essentially, forthcoming US market structure legislations could be pivotal for the catalyst of what's about to happen next. After President Donald Trump essentially took office, a leadership overhaul essentially at the Securities and Exchange Commission, SEC, in regarding the confirmation of Paul Atkins as the chair essentially of the SEC, prompted the regulator to retreat from years of aggressive enforcements against the crypto industry, and the SEC dropped nearly all of the pending cases essentially last year. Going into this year, no more crypto cases. Trump made promoting the US crypto industry as the central policy goal, a stance essentially Atkins has echoed by making it a top priority at the SEC and independent regulatory essentially tradition. Now, why am I essentially going back and forth regarding the SEC and what we just talked about 5-10 minutes ago regarding Donald Trump only choosing Republicans? Is because Goldman Sachs has included all of that in their reports, saying that 2026, seeing essentially what's happening right now regarding the SEC and CFTC only being pro-Republican crypto, essentially, Donald Trump still standing behind the policy of, America will become the capital of cryptocurrencies. Goldman Sachs has essentially included all of these as pointers of this is the direction we see it going because of everything that's happening right now. Now, from the direct, essentially White House control, draft bills now circulating in Congress would clarify how tokenized assets and decentralized finance DeFi projects are regulated and defined essentially the rules of the SEC and Commodities Futures Trading Commission CFTC steps Goldman Sachs essentially says are essential to unlocking institutional capital. Passage essentially in the first half of 2026 would be especially significant given the risk that the US midterm elections later that year could delay progress, the report said. The bank also pointed to its own survey data showing 35% of institutions cite regulatory uncertainty as the biggest hurdle to adoption, while 32% see regulatory clarity as the top catalyst. Despite growing interest, allocations essentially remain modest. Institutional asset managers have invested more, essentially about 7% of their assets under management in crypto, though 71% say they plan to essentially increase exposure over the next 12 months, leaving substantial room for growth. This is quite massive. Institutions coming out saying we're going to be increasing inside the crypto space. And it's only because CFTC, SEC are both aligning together to make the crypto capital of America happen. The bank said adoption has already accelerated through the familiar vehicles, such as essentially ETFs. Since their approval back in 2024, Bitcoin ETFs have grown essentially to roughly $115 billion in assets essentially by the end of 2025, with essentially Ethereum ETFs have also surpassed $20 billion. A hedge fund participation has also increased, with a majority now holding crypto and planning further allocations and increases. Beyond trading, the analyst also highlighted tokenization, DeFi, and stablecoins as areas poised for absolute expansion. Stablecoin legislations passed last year clarified oversight and reserve requirements, helping the market grow to nearly $300 billion in capitalization. Meanwhile, changes in the bank supervision, the rollback to restrictive custody, accounting essentially rules, and the overall new digital asset bank charters have collectively lowered barriers for traditional financial institutions to engage with the crypto space, the report said from Goldman Sachs. What Goldman Sachs is referring to now is essentially the OCC telling banks that they can essentially enter the crypto space, which was at the end of 2025, going to 2026. Banks can get involved more inside the crypto space, not worrying about essentially being sued by the SEC or CFTC because there's no more Democrats inside of them. The US market structure legislation is poised to be the dominant force for digital assets. Crypto asset manager even Grayscale said in a report, essentially, the firm's analyst said that they expect a bipartisan crypto market structure bill to become law in 2026, marking an absolute milestone for essentially crypto assets. So, Goldman Sachs coming out confirming that the steps that are laid out by essentially Donald Trump, one, still standing behind the idea of America becoming the capital of cryptocurrencies. Two, Donald Trump making sure that Republicans only control crypto regulations for the SEC and CFTC. And three, Goldman Sachs using those as pointers as, look, this is the direction we're heading because of what's happening around us. And this is the year cryptocurrencies will be taking off because the institutions will be entering the crypto space due to the SEC and CFTC aligning together to essentially bring the crypto regulations and move the markets forward. So, based on that, it's going to be an absolutely amazing year, to be fairly honest. You know, the Democrats have no voice whatsoever inside the crypto space, which is what we love to hear inside the crypto space. Now, moving on from that, going into BlackRock. Before we talk about BlackRock, let's go inside the comment section first. Let's see what's happening there. Then we go straight into the next news. So let's see where we were at inside the comment section. Share the line with Scott. Replacing SWIFT with a lessen the power of the United States to punish other countries economically, which is true, yes. I believe that XLM is a sleeper. It's moving quietly and slowly. I also believe that as well. XLM is moving very quietly, very slowly. But I do see XLM somewhere down the road jumping in price. Share the live. Let's go, Scott. Happy and prosperous year, Miles and CMF. John, thank you so much, brother. Good to see you. Happy New Year. What impact, if any, will the UN actions or World Court actions have on the United States? Great question, Scott. Regarding the UN situation, that they didn't like the idea of Donald Trump going overnight and picking up essentially the president of Venezuela, the US couldn't care less. There's something that everybody should understand. The US was the biggest powerhouse and still is the biggest powerhouse. But somewhere down the line, the US lost its, kahunas, the best way to put it. And now they're back. You see, the United States has the biggest voice and it can veto anything it pretty much wants. As the loudest voice, the biggest vote as well. Trump is, in my opinion, cleaning up the world. And regarding the UN, essentially the World Court actions, they can pretty much do nothing. They can talk as much as they want, but Trump will do what he knows. What he knows is best. And so far, Trump essentially taking the president of Venezuela. Everyone in Venezuela is exceptionally happy about it. All the citizens are jumping up and down and celebrating. Trump also said essentially Colombia is next. Trump also said Cuba is next. And he also said Iran is also next as well. He's liberating people, essentially, to be fairly honest. The only people who are angry regarding Trump essentially doing these types of things is Russia and China and the EU and the UK. But can they collectively do anything? No. Russia can't do anything about it. Neither can China. They've both essentially taken massive L's of what's happened with Venezuela regarding Trump completely taking over the country. And regarding the European countries that are coming together to go against Trump because of what he did in Venezuela, they can't do jack squat, to put it simply. They can talk as much as they want. They can vote whatever they want. America can still veto it because America has the loudest voice. A country like America, because of the loudest voice it has, because it can veto pretty much everything, it needs to take action. A lot of people need to understand this. The simplest way to put it is, if America wasn't in control, let's just say, if America wasn't in control of the world, and everybody had some equal voice, let's just say, China had the equal voice, Russia had the equal voice, every country had some sort of an equal voice, it just wouldn't work. Because China would pretty much swallow Taiwan if it wanted to. Russia would take Ukraine if it wanted to, or take any other country alongside of it. North Korea would do whatever it wants to do. South Korea will probably get missiled by North Korea 24/7 because nobody's in control. And a lot of other countries, a lot of other wars would be starting. So some people might not see it that way. Some people might essentially go against everything Trump does. But if you do see it my way, which is the correct way, to be fairly honest, I'm not being essentially any sort of, cocky in any sort of a way. But somebody needs to have the loudest voice to say, that's wrong, stop. And that's exactly what Trump did. The Venezuelan people were completely tormented by their leader. And Trump said, that's wrong, that needs to stop. Nobody did anything about it until Trump did. The Iranian people are being tormented by their government. Trump said, that's wrong, that needs to stop. Same goes for Colombia, same goes for Cuba. So regarding the UN or any other essentially European country coming together saying Trump is doing something wrong and so on, they have zero voice and zero impact. They can vote for whatever they want. They can say whatever they want. At the end of the day, America can just veto it. So good question, because a lot of people might be essentially confused on that matter. So trust me, you want America in control, because China would swallow Taiwan within 24 hours. Russia would take Ukraine like there's no tomorrow. North Korea will be missiling South Korea like there's no tomorrow either. Russia might even take Poland on the way as well. But when you have a country like America, it stops people like that. And some people don't understand that. Some people don't want America to have too much power. They want everyone to have equal voices. Equal voices is a stupid idea when it comes to countries. Equal voices between people is a great idea. But when it comes to world leaders, it's a stupid idea. Hey, evening, Miles and family. Susie, good to see you. How you doing? But good question, Scott, honestly, because a lot of people want to know about that. I hope the Clarity Essentially Act gets passed. Me too, I'm on the same page, Scott, I'll be honest. I hope it gets passed very quickly. Is there a possibility that the price does not, essentially do not match like last year? In what sense? Elaborate. Come on. Hey, evening, Miles and family. Susie, good to see you. How you doing? The best crypto group online. Let's go, Scott. Yes, happy New Year to all of my family and friends in CMF. Let's go, Scott. Exactly. Let's go, Stormy. We carry a big stick. We just have to be careful how we use it at times. I agree 100%, Scott. Great power comes great responsibility. I'm concerned about these countries you mentioned about being overtaken. Don't worry. We're one of those countries. And let's just go back to this. BlackRock. BlackRock's Bitcoin ETF ranks essentially top 10 amidst the inflows right now. BlackRock's iShares essentially Bitcoin Trust ETF secured $324 million in net inflows, ranking 10th in daily essentially ETF inflows on January 2nd, 2026. This positions BlackRock essentially as a pivotal player in cryptocurrency markets, potentially influencing Bitcoin's valuation and the broader ETF investment trends. So BlackRock's Bitcoin ETF ranking in top 10, getting the inflows back in, because Bitcoin inflows in terms of ETFs pretty much halted, you could say, towards the end of 2025. But they're now back. BlackRock's iShares Bitcoin Trust ETF recorded $324 million. The influx highlights essentially rising institutional interest in Bitcoin, affecting market dynamics and future asset allocations in cryptocurrencies. In a noteworthy event, BlackRock's iShares essentially doing these types of events. BlackRock's essentially managed by CEO Larry Fink achieved this milestone through strategic allocations, and such inflows demonstrate a significant market moment, indicating growing institutional appetite for Bitcoin exposure. I just want to add one thing to that, which is JP Morgan. So on one side, BlackRock news, not coming directly from BlackRock, but just an observation of BlackRock, essentially top 10 ETF for Bitcoin, essentially IBIT. On the other side of the spectrum, JP Morgan has come out essentially and said that regarding Bitcoin's hash rates, they're dropping again, which isn't a positive outlook for Bitcoin long term if the hash rates keep on dropping. But on the other side of the spectrum, BlackRock's essentially Bitcoin ETF is ranking in the top 10s. Once again, it's doing well for itself. Now, moving on from that to China. China's financial authorities have issued a joint notice labeling real-world assets as illegal financial activity. So the day China found out that essentially America might be trying to wipe its debts with essentially stablecoins, they decided to ban any Chinese company using stablecoins. And for some reason now, they've decided to also go against real-world assets. The financial industry groups in China have officially put out essentially a joint warning saying that real-world asset tokenization is prohibited financial activity. The statement says that the people and businesses in the US that sponsor real-world initiatives could be charged with crimes. China wants to charge American companies or Chinese American companies because they're getting involved in real-world assets. Now, by the way, China is big on the idea of CBDCs and control, but when it comes to freedom, not so much. The document is essentially co-signed by the National Internet Financial Association of China, the Banking Association, the Securities Association, the Asset Management Association, the Future Association, the Listed Companies Association, and the Payment and Clearing Association. The statement notes that real-world asset tokenization involves financing and trading activities carried through the issuance of tokens or other rights or debt certificates with multi-token essentially-like characteristics. It carries multiple risks, including risk of fraudulent assets, operational failure, and speculative hype. Do you know what solves all of those risks? A regulated market space. And China knows that too, but for some reason they're playing dumb. According to the notice, essentially, real-world asset tokenization activities have essentially approved by China's financial regulatory authorities. This claim essentially emphasizes that all real-world, essentially branded tokenized assets and services and intermediaries and trading platforms currently in the market lack any legal basis for operation. The notice also confirms that real-world assets is legally treated as fundraising and trading mechanism. This classification subjects real-world to China's securities laws and regulations banning illegal financial businesses. Any token issuance, trading agreement, or yield distribution now falls within prohibited activities. Sound familiar? Something that Gary Gensler was doing, essentially in the SEC. I think Gary Gensler found his new job working in China's SEC. Criminals take advantage of the situation to hype trading activities using the banners of stablecoins, worthless tokens such as Pi coin, real-world asset essentially tokens, and mining to conduct illegal fundraising and pyramid schemes, frauds, essentially associations stated. The statement also warned essentially that domestic staff who support overseas crypto or real-world asset token service providers knowingly will be held legally accountable. If the company essentially is registered offshore and the team operates in mainland China, it will be considered providing services domestically. This applies to protect teams and all ecosystem providers, including project consultants, tech outsourcers, marketing agents, core promoters, and payment integrators, and more. To that end, the entire Web3 service chain surrounding real-world assets is effectively terminated inside of China. The authorities said that the real-world assets are too risky financially, no matter how it is set up. There is no mentions of technical pilots or conditional compliance frameworks in that disclosure, and regulators essentially saw the problem as financial concerns, not a technological one. You know, the more China pulls out of the crypto market space, the more of an indication it is that the crypto space was entirely created by the US. Otherwise, China would be head over heels inside the crypto space. But the more we hear news from China regarding stablecoins, they don't want to be involved. Bitcoin mining, they don't want to be involved. Crypto, real-world assets, they don't want to be involved. NFTs, they don't want to be involved. But there was a time when China was leading the crypto space. And now China is just pulling back every step, which is an indication of, if you ever wanted a confirmation of where Bitcoin originated from, it definitely wasn't China. By the looks of it, it was the US. Hence why China is always just taking one step back as the days go by, instead of one step forward. The association have cleared essentially that mainland China is no longer a jurisdiction awaiting regulatory clarity. It is one that has completely rejected real-world assets. The industry participants essentially are left to either completely relocate their business to a jurisdiction with an independent, compliant regulatory system, or abandon real-world assets entirely. Sounds familiar again? Remember when Gary Gensler was pushing crypto companies outside the US, and they all came rushing back when Trump came back and said this will be the capital of cryptocurrencies? Well, it seems like China is doing the exact same mistake. They're pushing crypto companies out of China. However, several mainland Chinese firms, including financial institutions and tech companies, have initiated real-world asset projects in Hong Kong last year. However, they have maintained a low profile since the CSRC advised Chinese brokerages in September to pause their real-world asset projects in the city. A Hong Kong subsidiary of China Merchants Bank tokenized $3.5 billion of money market funds on BNB chain. Also in the US, popular stocks like Apple, Nevada, Tesla have been tokenized as well. Each token reflects the price of this real-world counterpart, backed by actual shares held in custody by essentially backed finance, the Swiss-based essentially platform behind X stocks, which are referenced essentially to as tokenized securities. Total X stocks trading volume has reached more than $457 million since the products launched on a major exchange in June, as per the June essentially analytics. Although there are currently a total of $19.4 billion of real-world assets issued on chain, down 20% in 6 months, with essentially 602,000 asset holders as well. So China, for some reason, has decided to take a page out of Gary Gensler's playbook, which is to ruin itself for some oddly reason. Honestly, the more I hear about China taking steps backwards, the more of an indication I have of who was really behind the crypto space. And it wasn't China or Russia, it was the US. The only reason why China would slowly start hating the crypto space is because of US involvements, to be fairly honest, because they're rivals. China has essentially tried its best to replace the US in some sort of way or to get to that sort of level, and it's always failed at it because of the power, the immense power that the US essentially has. So honestly, the more I hear China taking steps backwards, the more it confirms for me that the entire crypto space was created by the US, including Bitcoin's footsteps. And that major indication, essentially one of the indications for me, was when Anton, the advisor for Putin, came out on Russian news and said that America is going to be using stablecoins to wipe its debts. And exactly 24 hours later, China came out and said, we are not touching stablecoins and no Chinese company is allowed to touch stablecoins. Another indication of why I think the US is completely behind the crypto space. Good. I would rather have the US controlling the crypto space than China, to be fairly honest. Nothing against China in any sort of way or its people, just they're making bad judgment calls is what I would say the government of China is. The Chinese people itself are amazing people. Now, Japan is what I want to talk about next. Japan's finance minister says it wants to support crypto trading at stock exchanges. I don't know if anybody has heard the news or if you haven't. Essentially, if you have heard the news or if you haven't heard the news, I'm about to share it with you. But before we talk about that, let's go start a comment section first, and then we go straight into the Japanese news regarding the crypto sector. I'm concerned about those countries you mentioned about being taken. What's your opinion of repricing of XRP? In what sense? As it essentially goes higher or lower? Elaborate on that, John. Hi, Miles. Is this now Boron? Johnny, it looks like it. Can major corporate, but we still need regulations, Johnny, to be fairly honest. Can major corporations help push the usage of crypto quicker than banks? Yes. Corporations will be essentially able to push the crypto space to another level, because if corporations start using blockchain technology to essentially doing payments, it puts pressure on the banks to move quicker to integrate essentially the XRP ledger, for example, into the payment system. If institutions around the world, or American institutions in general, start using crypto technology, blockchain in general, for payments, it would put a lot of pressure on banks to move at a much more rapid pace. Even the banks that are a bit iffy on, they still want to be in control and they don't like the idea of tech companies becoming banks, they have no choice because the corporations are now using crypto. Do you see China and Russia being a problem for the US as we go forward? Do you see other smaller countries joining them? Are you referring to essentially BRICS is what I'm suggesting Scott's question is based on, regarding the, essentially US's problem with China, Russia, and, other countries maybe joining China, Russia? No. Any country that joins China or Russia going against the US is, in my opinion, the worst judgment call in history. If you go against the US, it's the worst judgment call in history, I would have to say, for any country. And to be fairly honest, Russia is slightly flaky as well. Putin always does best what's for Russia. If there comes a time when Putin essentially is able to rekindle their relationship with the US, Putin would leave China in the dust, to be fairly honest. Regarding essentially India trying to be, playing a role inside of BRICS, that's not going to end well for them either. And so far, India's been playing both sides, That's not going to end well for them in general. Regarding any country leaving the US to go and join them, it's a stupid idea because the US will just sanction that country into the ground. And then that country won't be able to breathe. And that country won't be able to make any money. And if they can't make any money, then their people will start rioting against their own governments. So, and regarding China, being this massive powerhouse it is, China has one major vulnerability, which is China is the biggest exporter in the world. You could pretty much say China produces everything, you could pretty much say up to a certain scale. If China gets sanctioned into the ground and they're not able to sell a single item, it would collapse. China already has a crippling real estate market sector. If it's not able to sell anything to Europe, for example, or to African nations, or to Middle Eastern countries, then it would collapse. This entire economy would collapse. It's the biggest exporter in the world. And if it gets sanctioned into the ground and it won't be able to sell anything, the country would collapse. And China knows that. And that's their biggest vulnerability. So they can play the tough card as much as they want of we're strong, we can stand alone, 2 legs, we could go against the US forever. That's a one big lie. And regarding Russia, Russia's already feeling the pressure. Russia went from using essentially fiat or their own essentially currencies to going towards cryptocurrencies due to the pressure essentially of sanctions. So even for a second, if China and Russia decide to go against the US, they can't. Because China will get sanctioned, which means it won't be able to sell anything to the rest of the world, which means it will collapse completely. And Russia's best friend, not being there anymore to support them, would essentially put Russia by itself, in other words. So regarding that matter of, other countries trying to join Russia and China, as if Russia and China are some sort of massive powerhouses against the US, everybody who thinks like that, you're mistakenly wrong. And I'm not saying Scott's thinking like this because Scott is just asking a question. But if anybody else out there thinking, Russia and China could go against the US and so on, it's a losing battle for both of those nations. Can major corporations, how will these actions affect the dollar, thus affecting the crypto market space? When the dollar essentially gets pressured, crypto market space tends to climb because alternative currencies are seen more beneficial in that sense. But in the past, towards the end of 2025, crypto wasn't doing too well in that sense, but now it is again. But also, stablecoins reinforce the US dollar as well. I mean, the price of XRP does not go up beyond 3 and creates a new alternate. I mean that the price of XRP does not go up beyond 3. Why would it not go beyond 3 and create a new alternate? It would go up essentially beyond 3, in my opinion, 100%. China, North Korea, and Russia are up to something. The US has to keep an eye on them. I do agree about that 100%. The good thing is Trump is in control of the US, and nothing gets by regarding Trump. As much as people might think Trump is a stupid man or essentially a guilty man or a criminal, he is an intelligent man, no doubt about it. Some people might not see it that way, but look at what he's done so far. Good evening, Miles and CMF. Good to see you, Zolotti. How you doing? That way, see a full good year, essentially, of regulations, just like last year, but no price movement, just like last year. We just see regulations, no price movement. No, we'll see regulations and price movement because it's all about the institutions this year. No longer about essentially the retail section. Now I understand. That in order to work efficiently, essentially, to work efficiently as it was intended, it has the high price, so it would be reciprocated higher. In that sense, yes, I know what you mean now. BTC, David Schwartz, from what I've heard. Okay. Now, regarding David Schwartz being part of BTC, I've heard that too. Now, Japan. So if you haven't heard the news or have heard the news, I'm about to share it with you. You've probably seen Japan's finance minister essentially, news circulating on X or other social media platforms. Here is what you need to know. Japan's finance minister says she supports crypto trading at stock exchanges. Finance officials signal tax and regulatory changes aimed at bringing digital assets into the financial into the financial mainstream. Japan's finance minister, essentially, Satoshi, said she fully supports the integration of crypto trading services by the country's stock exchanges. as she touted 2026 as the digital year, according to a report by the Japanese crypto news sites. She also emphasized that regulated venues will play essentially a central role. Okay, I just realized nobody can see me. 1 second. Am I back? No. Okay, I think it's working, yeah. Can everybody see me and hear me? Okay, we are back. Now, regarding Japan, is what we're going to talk about next. Japan's finance minister essentially says she supports crypto trading at stock exchanges. Japan's finance minister essentially said she fully supports crypto essentially integrations and trading services by the country's stock exchanges, as she touted 2026 as the digital year, according to reports by Japanese essentially crypto news sites. She also emphasized that regulated venues will play a central role in expanding crypto adoption at a essentially ceremony essentially in Tokyo on January 5th to mark the first ever stock market trading session of the year. For the public to enjoy the benefits of digital assets and blockchain type assets, the role of securities and commodities exchanges is important, she said. Digital asset trading in Japan remains largely soiled from traditional capital markets. The separation has been essentially a defining feature of Japan's regulatory approach, as digital assets have long essentially been governed under the Payment Essentially Services Act rather than the securities law. However, regulators are now considering shifting crypto into the securities framework that governs stocks and bonds to better essentially reflect how these assets are used and regulated. She also pointed out to overseas essentially presidents, highlighting how crypto investment products have gained traction in the US. And the US, essentially through ETF structures, they have spread essentially as a means of structures essentially and hedging against inflation, and similar efforts are expected in Japan. She said, signaling openness to more mainstream crypto investments and vehicles. Japan is opening its doors to cryptocurrencies, and the stock market, which means real world assets. So China closing its doors to real world assets, Japan opening its doors to real world assets. That is what we call a progressive country, while the other one is just stuck in the times. Her comments essentially comes as Japan's Financial Services Agency advances plans to overhaul essential crypto regulations and taxations by 2026 fiscal year, including essential proposals to move crypto gains into a flatter tax framework and align certain essentially digital assets more closely with traditional financial products and industries. Participants have also long argued essentially that such reforms are necessary to keep crypto activities offshore. As finance minister, I will fully support efforts by exchanging towards developing essentially such cutting-edge fintech and technology-enabled trading environments. She also said, reinforcing the government's shift from cautious oversight towards integrated essentially structure, which is exactly what Americans are doing right now. So Japan's finance minister opening doors to crypto stocks is an amazing idea. It actually essentially is going to bring an immense amount of liquidity, is what I would say. Now, that is amazing news coming out of Japan, to be fairly honest. Completely opposite of what's coming out of essentially China regarding renewable assets. And it is going to be happening somewhere around January 5th, which is today. Japan is getting ready to enter essentially crypto and stock market together today. Amazing news for the crypto space. Now, the senators is what we're going to talk about next on tonight's live. So here it is. Senators debate groundbreaking cryptocurrency legislations. As you all know, we want the Clarity Act passed inside the crypto space and signed by Donald Trump ASAP, because that is what's essentially holding the crypto market space back up to a certain extent. As we find ourselves in an election essentially year, the price of Bitcoin has surpassed $94,000, with cryptocurrencies experiencing notable gains following a prolonged period of heavy sell-off essentially. This rise was anticipated, especially after the 2-week holiday period. However, for momentum to continue, trading volumes must increase and more exciting movements should be observed in altcoins. January 6th is marked as a significant day in this context. According to a leak, essentially, senators from both parties plan to meet on January 6th to discuss regulatory frameworks concerning the crypto market space. This proposed legislation is known as the Clarity Act and aims to bring a clearer perspective to the cryptocurrency markets. The Genius legislation was essentially approved last year, encouraging major financial institutions and banks to take significant steps in the stablecoin sectors. The Clarity Act essentially intends to similarly to enable these institutions to offer cryptocurrency services. The primary motivation for large financial institutions is to profit through offering legitimate financial services to their customers. Although there are existing crypto service providers, essentially the Clarity Act must be intact quickly to allow major banks to engage in this sector, primarily driven by financial incentives. As they profit, it is essentially expected that cryptocurrency markets will attract more liquidity and rise in price when essentially the Clarity Act is put into place. After gaining Senate approval, the process transitioned to the House of Representatives, where different versions of the bill are essentially rekindled over several months. Final voting follows, leading to the bill being essentially presented to Trump for approval. This process is expected to conclude by August, is what they're suggesting. In my opinion, not so much. It'll be much more sooner than that. If Democrats wish to avoid their anti-crypto image from harming them in the midterm elections, they must seize this final opportunity to win over millions of Americans and crypto investors. As you also know, we are coming up to the midterms in terms of the elections in the US right now. If honestly the Democrats want to be seen as human beings for once in their lives, maybe they could essentially approve the crypto space going forward instead of standing against it, especially in the midterms. Now, moving on essentially from the Clarity Act, which is something that we exceptionally need to be passed this year. And the only reason regarding the Clarity Act, getting extended a little bit to Q1 to Q2 and so on, is only because of Democrats. That's why Democrats are allowed nowhere near the SEC or CFTC, because they're horrible at making regulations for the crypto space. Now, moving on from that to Ledger. If you are somebody that holds Ledger, well, another breach has just happened. Before we talk about Ledger, let's go to the comment section first. Let's see what's happening there, and then we go straight into the next news. So let's see where we were at inside the comment section before the black screen situation happened. We were here. How will Japan benefit from the crypto markets with the reserve carry trade? It will benefit quite a lot, especially now that Japan is going to get involved in that crypto space and the stock market intertwined together. It will provide quite a lot of liquidity to the Japanese market space. It will also make it a much more tradable market space, from outside investors as well. Mouse, you okay? No, go. Okay, we're back now. Are we seeing $20 XRP soon, Johnny? Because of every change is what I would say. Bro, my question is how to look good as you. Thank you so much for the kind words. You think China essentially is trying to dump the markets? Do you think their tactics will work and crash the markets? No. Regarding China can have the capabilities to dump the crypto market space. China can have the capabilities to dump any market space, to be fairly honest. If they wanted to, they do have quite a loud voice in that sense. And then the US obviously has a bigger, louder voice than them. But it wouldn't be beneficial for them in any sort of way to do that, is what I would say. Especially in times like this with the amount of sanctions around. So many countries are sanctioned right now. Cryptocurrencies is the only way they're transacting right now, to be fairly honest. If the US uses stablecoins, where does XRP fit in? Good question. Regarding the US using stablecoins, multiple alternative methods will be used to carry trades. Regarding stablecoins only have one purpose. So it's, for example, regarding USDT or USDC or RLUSD, it's only beneficial in terms of dollars. XRP plays the role as essentially a middleman currency. For example, a US bank and a European bank want to essentially transact together. There's a client, a US client that wants to send money to a European bank. That European bank needs to have dollars, whereas essentially American bank also needs to have euros and so on. But in a world where the XRP ledger is essentially the main, essentially number one financial system, both banks would only need to carry XRP to make that transaction happen, in a sense. So that's the role difference between XRP playing a middleman role and a stablecoin. A stablecoin is only useful in that one particular currency. It just goes back to the old system where every bank has to carry euros, dollars, pounds, yen, rubles, and so on. But with XRP, they only need to carry XRP. So stablecoins are beneficial in a sense, but XRP is more beneficial for banks because they only have to carry one currency to make multiple transactions. Whereas when it comes to essentially RLUSD, USDT, USDC, the European stablecoin or the British stablecoin, essentially the Russia stablecoin, the Indian stablecoin, the yen stablecoin, the yuan stablecoin, so on. And then it just goes back to the same old story of every bank carrying every currency to make every transaction possible. We're trying to move and shift away from that old system to a system where one currency fits all shoes. The difference between XRP and one particular stablecoin. Have you heard of Exceler? Actually, for almost a year, where the Republicans are like broadcaster. Have you heard of Exceler? They pay holders and feed other privacy protocol, which pays holders. No, I haven't. To be honest, I haven't heard that at all. Go again. I'm back. Okay. and then go back again. Yeah, it's working again. Don't know really what's happening here. Miles, please look into your crystal ball and tell us how long it will be until XRP has is big upwards. Breakout long. It depends on how fast we move in terms of regulations, is what I would say. But I'll look into it and I'll get back to you. Who shot the lights? Back to normal is what I would say. Now, ledger. If you're somebody that's holding a ledger, essentially, they have essentially been breached again for a third party. So please be careful when it comes to any sort of cold wallets. It could be Tedger, it could be Ledger, or any other cold wallet out there. When you tend to use DeFi spaces with your cold wallets, things can go sideways. I always tell people to not do anything in terms of DeFi space when it comes to cold wallets. If you want to use a DeFi space, use a Trust wallet. Don't use your cold storage wallets and connect it to DeFi, essentially, because that can end bad. The ledger itself is safe, but when it connects to DeFi, anything can happen. So preferably keep your ledgers or your cold wallets in general away from the DeFi space is what I would say. Now, what we're going to talk about next is XRP, the one news that a lot of people essentially have been waiting for on this live. So, regarding essentially when I said we're going to come back to the Venezuelan situation for XRP, there's something speculative going around right now, and I want to share it with you. It's not confirmed, it's not facts in any sort of a way. It's just something that's came out, and I want to share it with you just in case it comes out to be true in some sort of a way. At least you would know about it. And if it doesn't, then I still share it with you. It's just speculative news. This particular article that I'm about to share with you is speculative. Venezuelan oil and XRP just connected in unexpected ways. This article is from CoinMarketCap. The beginning of 2026 did little to ease anyone in the year. The sudden and unexpected collapse of Venezuela's politics in the US, swift essential interventions in its oil interest shocked the world markets. The majority of the news coverage was related to energy security, regime change, as well as geopolitical issues. But beneath all that noise, something else obvious began to take shape. Venezuela holds the world's largest proven oil reserves, and whoever controls how that oil is sold also controls how massive amounts of money move across borders. That's where the conversation stops being purely political and starts becoming financial. And surprisingly, that's where XRP enters the picture. Bringing Venezuela oil back to global markets isn't just about restarting the pumps and tankers. Every shipment needs financing, settlement, and cross-border clearing. Traditionally, that has meant slow legacy systems built around correspondent banking and SWIFT. In today's energy markets, those systems are expensive, slow, and essentially increasingly outdated. Venezuela had already turned towards crypto tools like USDT and Bitcoin in recent years to work around sanctions regarding money laundering. With US oversight now back in play in Venezuela, those shadow methods regarding using USDT or Bitcoin are far less essentially viable. What replaces them needs to be faster, compliant, and scalable. And that's where XRP starts to make practical sense, not as a speculative bet, but as infrastructure. Because XRP is technically the only regulated crypto asset on paper. Genuinely. The difference between Bitcoin and XRP matters more here than most people realize. Bitcoin has increasingly become associated with sanction avoidance and reserve asset speculation, which is true. Any country that is sanctioned by the US tends to go towards Bitcoin and USDT, which the US doesn't like at all. So that puts it under regulatory microscope, essentially, you could say. Bitcoin has increasingly become associated with sanctions and avoidance and reserve asset speculative. That puts it under a regulatory microscope, especially when nation states are involved. XRP plays a very different role. It's designed for fast settlements and integrates with regulatory frameworks and aligns with essentially modern payment standards. In a world where oil trades and sovereign transactions and institutional settlements need speed and predictability, that design choice suddenly looks far more relative, essentially, and hype driven narratives. One of the more interesting details isn't price action but behavior. While retail excitement around XRP has cooled at times, institutional exposure appears to be increasingly the regulated channels. Exchange balances essentially have dropped, with essentially often signals accumulation rather than panic selling, which is true. Exchange balances regarding XRP have dropped. A lot of people are taking their XRP off the exchanges, and XRP ETFs are the only ones that had inflows when Bitcoin and Ethereum didn't in the hardest times. The pattern usually shows up when larger players are positioning early. Not chasing headlines, infrastructure essentially assets tend to be accumulated when they're boring, misunderstood, or uncomfortable to talk about. In other words, when the crypto market space towards the end of the year was going through some weird cycle of complete manipulation, there was a lot of things happening, which was essentially a lot of people taking their cryptos and mostly their XRP off the exchanges. At the exact same time, XRP was having inflows into ETFs when Bitcoin and Ethereum weren't. And these could be seen as signs of positioning for what's about to happen next. Going into 2026, what's the first thing that happened? Venezuela. It's easy to essentially, this is why essentially it says infrastructure assets like XRP tend to be accumulated when they're boring, when they're misunderstood, when they're uncomfortable to talk about, when nobody wants to look at XRP, in other words, is when the institutions are actually in play, when the governments are in play. By that time, they become obvious, the positioning is already done. It's easy to dismiss big geopolitical connections as overreach. Not every global event triggers a financial reset, to be exact. But it also is hard to ignore how energy markets, liquidity, and settlement systems are starting to overlap more than ever. Venezuela's oil isn't just coming back online, it's re-entering a financial system that has changed dramatically. In that environment, XRP doesn't need to essentially reinvent the global finance. It just needs to do what it was built to do. And sometimes the quiet infrastructure doing its job ends up being far more important than the loud stories grabbing headline attentions. So, just wanted to share that with you regarding Venezuela's situation and XRP, essentially, that there might be an intertwined situation on that matter. And it is true. Venezuela is re-entering as the biggest oil, essentially, country into the financial markets once again. They won't be using essentially SWIFT payment systems in that sense. So they would need an alternative payment system. It wouldn't be Bitcoin or USDT because the US doesn't like that, because due to the sanctions, they don't like any country using Bitcoin and USDT, because that's how they get around sanctions and stop money laundering. But XRP is the only regulated payment, essentially the only regulated currency in the US technically on paper. As much as people want to argue the fact that Bitcoin is regulated, also Ethereum is, they really weren't, to be very honest. Gary Gensler was pressured to greenlight Bitcoin, and then on Ethereum, he never could give an opinion if it was or wasn't a security. But XRP had to go through a very long battle to get its title. Now, keeping on XRP and essentially Ripple. SBI CEO, Ripple now major profit pillar. So what's happening in Venezuela regarding is an intertwined situation with XRP? On the other side of the world, regarding Japan, SBI Holdings CEO essentially confirmed today that the financial giant's decade-long bet on Ripple has matured into a core driver of the company's profitability. In his 2026 New Year's address, he mentioned the cryptocurrency ecosystem as critical component of the group's current financial health. Needless to say, it is these fields, referring to Ripple investment and crypto ecosystem, that currently play a part as a pillar of the SBI Group's earnings. This validates the financial giant's financial strategy that was originally essentially developed years ago. In my 2018 New Year's address, I stated we at SBI Group position A and B, namely AI and blockchain, as the technologies that will bring about the greatest social change over the next 10 years. In the financial services sector, we must devote essentially our full efforts to building a essentially cryptocurrency ecosystem, and we have done exactly that, he recalled. SBI Holdings participated in Ripple's Series B funding round in September 2016. The partnership was solidified earlier that same year with the establishment of SBI Ripple Asia. This joint venture was launched to bring Ripple's blockchain-based payment solutions to financial institutions in Japan and across Asia. The partnership brought its first major consumer product and the launch of the Money Tap in 2018. The mobile app, which was powered by Ripple's distributed ledger technology, made it possible for customers of more than 60 Japanese banks to settle domestic payments almost instantly using Ripple's technology back then for SBI. Now, essentially, Kato joins SBI's CEO, Kato, joins essentially Ripple's board of directors. His appointment replaced Takashi, essentially, then CEO of SBI, essentially Ripple Asia. The partnership faced its biggest stress test when the U.S. Exchange Commission sued Ripple back then regarding Gary Gensler's situation. The company issued public statements affirming that XRP was not a security under Japanese law, and SBI began integrating the XRP ledger to broader financial services over the past few years. So, SBI CEO coming out today and saying that their bet on Ripple matured brilliantly, and it's their most profitable ever. On top of that, regarding SBI essentially holding CEO coming out and saying that's about Ripple XRP, PwC also came out with a new perspective today as well. PwC names Ripple a game changer in financial services. PwC, a global leader in professional services, dubs Ripple as a critical financial infrastructure in their newest report. The report recognizes Ripple's network for enabling real-time settlements, cross-border payments, and liquidity management, emphasizing a strict value for banks, fintechs, and payment providers beyond being just a digital token. Ripple tackles a major flaw in traditional finance: slow, costly essentially cross-border payments. Through RippleNet, institutions can transfer essentially funds in seconds with minimal fees, giving XRP tangible real-world utility beyond mere speculation. PwC's report underscores Ripple's ability to integrate with traditional financial systems, making it an appealing solution for banks exploring blockchain adoption. Its compliance-driven, scalable infrastructure positions Ripple as a bridge between conventional finance and emerging decentralized economies. With clearer US essential regulations, PwC is expanding its crypto services and signaling newfound frameworks for advising clients on digital assets after years of regulatory caution. PwC's endorsement could also strengthen institutional confidence in Ripple even further, accelerating adoption among major banks and payment networks, establishing essentially as a regulatory clarity and operational reliability, driving crypto integration. Well, the report essentially cites a growing trend whereby essentially major financial institutions increasingly view blockchain as essential infrastructure, not just a speculative assets. Ripple's inclusion underscores this shift, positioning cryptocurrencies as a strict tool to boost efficiency and transparency in global finance. Therefore, PwC's recognition of Ripple as financial services infrastructure marks a milestone for both XRP and the broader crypto ecosystem. Just want to say one thing. This year, in my opinion, could be an incredible year. One, with the regulations coming into play. Two, with a lot of countries being liberated essentially from their dictators, but now get back to crypto. Three, is all about institutional money and government money. Four, regarding Venezuela re-entering the oil market space and using actual currency, not just Bitcoin and USDT to avoid sanctions, that's going to bring an immense amount of liquidity towards the table. Five, regarding oil also price, in terms of crude oil coming down, is positive. That tends to be an indication of more money is going to be spent elsewhere. And then six, regarding Republicans only being in charge of regarding the SEC, CFTC when it comes to crypto regulations, brilliant. The further we have Democrats away from the space, the better it is for everyone. And then it's going to be a year. On that note, On that note, we have come to the endings of tonight's live. Sorry about that, everyone. I don't know what's happening. I'll see everybody tomorrow, same time as usual, 10 p.m. lunchtime onwards. It's great to be back. Disclaimer of this live, as usual, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. Thanks, Miles. Have a great live, brother. Thank you so much. T. See you tomorrow, T. Same time as usual. Joe, see you tomorrow, same time as usual. Great to have you back, Miles. Excellent live as always. Excellent to see you tomorrow. Artistic, see you tomorrow, same time as usual. Thank you, Miles. Mike, see you tomorrow, brother, same time as usual. Mike, Free Forever, see you tomorrow, same time as usual as well. Scott, see you tomorrow, same time as usual. Susie, 2026 for the win. Night all. Thank you, Miles. Let's go, Susie. See you tomorrow, same time as usual. Great job tonight, Miles. Let's go, Scott. I will see everybody tomorrow, same time as usual, 10 p.m. lunchtime onwards for the next episode of the CMF Live, episode 426. Thanks, Miles. Great start to 2026. Let's go come and toast. Good night, Miles. Check you back. Direct message on here, brother. Let's go crypto Don. See you tomorrow, Mike, as well. Thank you, Miles. Let's go Stormy. See everybody tomorrow, same time as usual. Everyone have a great day or a good night, depending on where you're around the world. Love you all. Good to be back. And Happy New Year to everyone as well. See everybody tomorrow, same time as usual. I think our group is good technology. Take a hit for us daily. Good night, all. Stormy. Let's go. Let's go. Pablo. Let's go. Stormy. Let's go. Jane as well. See everybody tomorrow, same time as usual. Thanks, Miles. See you tomorrow. Shelly. Let's go. See you tomorrow, same time as usual as well. See you tomorrow, Addy. See you tomorrow, same time as usual. Like, comment, retweet, follow, subscribe if you already haven't. If you have, thank you so much to everyone. See you tomorrow.